Welcome back to my YouTube channel, guys. My name is Hanrey, and we are going to speak about trading NASDAQ. Okay, so NASDAQ has been very bullish this last week, and it has given us extremely good entries to actually take these trades on. So I'm going to talk about these entries and explain to you how I see it, how I use a little bit of ICT knowledge, and how I use some of my own knowledge and my own twist on it to make these entries awesome. So let's quickly just go to the 4 hour because it's very important to always keep an eye on the higher time frames as to see what we are looking at. NASDAQ is bullish. It's breaking higher highs the whole time, which makes it bullish. So we are going to look for bullish trades. Or if we take a bearish trade, it's going to be a much shorter trade, okay? It's not going to be a quick, a long trade. It's going to be a quick scalp. That's what we will do if there's bearish trades. But in terms of this, we're going to look at bullish trades because NASDAQ is very bullish. Stocks are doing well, crypto is doing well, NASDAQ, everything is just doing well. So we're going to keep an eye on the 4 hour. That's why I say always keep an eye on the general trend just to know what direction we're going to look the trades for. So I usually trade on the 1 hour and the 30-minute, and then I do love to go down onto the 1 minute for a snipe entry. But in this instance, we're just going to look at the general thing here, like the general strategy. Instead of doing all the little fine things. But this is just like basic bullish trading on NASDAQ. So if you want to know more, keep an eye on this video and yeah, enjoy. Okay, so how this works is we're going to always look for a break of a high or a low. In this case, it's going to be highs because we are in a bullish trade, a bullish market. Then we're going to mark out an order block. We're going to mark out our fair value gap. And then we're going to use the fib to confirm. And then we can use that same fib for the TP. Okay. So if you want to write this down, you can write this down because this is very important. You can just put it there next to your computer or on your phone or something. Because this is what all that you have to look for. Okay. So cool. We're going to just mark out this high over here. Basic break of this high. So we are very bullish, okay? We even have a break of an high here, so it's just breaking highs the whole time, indicating that we are going to look for buys even more. So that's why I marked out this area. Now we're going to look for an order block after these highs are broken, and the order block is obviously this nice opposite candle over here. So I'm going to mark it from the wick to the wick. So that is our order block in this upward trend, the last opposite candle before this trend started popping off, which is that one, okay? Then a fair value gap above the order block, okay? Fair value gap above the order block. So I will take that wick there until that bottom part of that candle. So a fair value gap is basically a body without a candle coming and moving back into it yet, because you're going to take the trade when that candle moves back into that body. I call it like a naked body because there's nothing else than just a piece of body there between two candles, okay? But it's the one closest to the order block. Okay, so I marked it out there. Let's make it a different color. Let's make it like blue. Okay, so there's your fair value gap, there's your order block, and you will then take the trade on that fair value gap area over there. If you're a bit more conservative trader, some people take it on the top of that order block. We will see an example like that soon. But that's usually the best area to take your trades with. But you can confirm it with your fib. So I'll take it from the low until the high over there. So the low there to the high over there. And you will then see, I usually say in my other YouTube videos as well, look at the 60 to 50 area, right? The 60 to 50% area is where you will find the optimal entry. So usually around this area, okay? A little bit above 50, a little bit below 50. That is going to be your optimal area for an entry, okay? So perfect fib gives you that entry as well. And now we will use this blue line as our TP1. You can use the yellow line as your TP2, and if you want to, TP3 was it today. So those could be your 3 TPs. If you just want a normal trade, safe trade, take that blue line, the top of that fib, as your TP1 or just your TP. Okay, so let's look at another example. Okay, so we got this one over here. I'm going to delete these ones so not to confuse you. So we got the high broken over here, right? It's actually a very clean example. High was broken there. So after that high was broken in this New York open area, we've got our fair value gap over there, and we've got an order block over there, which is perfect. So I like these order blocks with the fair value gap just above it. It's just extra confirmation. So look at that perfect trade. You can then place your entries in that fair value gap. Let's take the fib quickly, and here you will see the perfect retest on the 61. So like I said, between the 50 to 61 area over there is where you will look to get your entries in. Okay, so another perfect example for a bullish trade. And then the next day, again, this main high was broken. So even a stronger high was broken over here. And NASDAQ came back in to test this order block at the top with quite a big fair value gap over there. So now I will just mark out the fib again so that you guys can see how nicely it works. So in this case, it went to the 71, but that's fine. I mean, your stop loss will probably be in just below the 78 area, okay? If it goes past the 78 area, it's probably going to go into a bearish dive. But in this case, put your stop loss just below that 78 area. So what a nice trade once again. And then the same with the news that happened yesterday. I think it was FOMC minutes. We're going to mark out. So you can even trade news with this because news follows technicals. Always, it's just a little bit more up and down for like a few minutes, but it always follows it. So here's your order block. I'm going to make that green again. And here is your fair value gap. Right, look at that little gap there between the wick, the piece of naked body there. All right. So yeah, there's your fair value gap. So in this case, I think it's going to be a little bit over the 61 area due to the news, like you can see over there. So it was a little bit over. This is the volatility of the news. But if you are a little bit of a smart news trader, you'll know that you need to make your stop loss a little bit bigger because of the stop hunts that happen during news trading. So still a very good trade if you moved your stop loss accordingly. I mean, this isn't a very big zone, so having your stop loss move down a little bit is fine. But you can also see that this order block is at the low point of this fib. So you know that it actually, you need to put your stop loss below that order block. Where with this one, for instance, the order block's not at the same point as the fib. So that makes sense to put your stop loss then below the 78, where with this one, your order block is actually part of the 100% zone over here. So putting your stop loss just below it just makes more sense. Okay. So cool. Thanks for listening, guys. I hope this helps. If you want more in-depth explanations of maybe some stuff that I'm discussing here, please let me know in the comments and I will help you guys out. Please like and subscribe and check out Blue Guardian, link in the bio or link in this description. Very good prop firm to use. I love them. They've been helping me a lot. Good customer support and just no bull with them. So yeah, check them out and I'll check you guys in the next video.